Before you start house hunting, let's talk about two numbers that matter most. It's not the price, it's not the interest rate, or the cash to close, because those numbers that either moves you forward or it keeps you stuck. There are two parts to those numbers. You have your down payment and your closing costs. Your down payment is the portion of the purchase price that you're putting down towards the home itself. It affects the loan amount, your monthly payment. Closing costs are the transaction expenses, your lender fees, title work, attorney, insurance, taxes. Two different buckets, but both of these things matter. Here's what most buyers don't realize. You don't always have to pay it all yourself. So I need you to write this down. There's 4 main ways we can reduce the cash you need for closing. 1, seller concessions. We're going to negotiate for seller concessions to cover part of your closing costs. 2, we have lender credits that structures the loan and offset upfront fees. 3, builder incentives. New construction often includes money towards closing. And there's these down payment assistance programs that offer grants, forgivable loans that help you with upfront cash. Most buyers only explore one of these. I look at all 4, and sometimes we layer them together. And no, down payment doesn't automatically mean 20%. That's the old thinking. Conventional loans can start with 3%. FHA loans are at 3.5%. VA and USDA loans can be 0 down for those qualified buyers. The key is not guessing. The key is running the numbers before emotions get involved. Let me give you some real talk about strategy. If you bring every dollar you have to closing, you might feel proud at the moment, but what happens when the heating and air goes out 2 months later and your savings is gone? That's when the real stress begins. Sometimes it makes more sense to negotiate closing costs and keep cash reserves. Sometimes it makes more sense to put more money down to lower the payment long term. This isn't about doing what your friend did. It's about building a plan around the risk tolerance, job stability, and long-term goals. That's wisdom. Buyers don't hear enough. Here's how we build a smart plan. Before we begin to tour one single home, we answer these 3 questions. How much cash do you want to bring to closing? Is lowering your monthly payment the priority? Or keeping more money in the bank more important? These answers guide everything. Do we negotiate price? Do we push for concessions? Target builders offering incentives, layering in assistance programs. That's where experience matters. The goal isn't just getting you into a house. It's getting you in strong, with clarity, with reserves, and with a structure that actually fits your life. When you understand where your money goes and what's negotiable, the process stops feeling overwhelming and it starts feeling possible.